everyone, to episode 56 of Top of Mind with Consilio Wealth. Today is Monday, August 26th, 10:16 in the morning. And we are here to give you an update on what's going on in markets. We're going to talk about how companies at this latest earnings season are not concerned with the economy. We're going to talk about the Chipotle CEO moving to Starbucks and his remote work clause in his contract that's been all over it's been all over the news. We're going to talk about the Fed after their infamous Jackson Hole meeting and what was said in that meeting, jobs, and finally, grocery price gouging. Action-packed list today, a bunch of items. How you doing?
Pretty good. You timestamp us?
I did timestamp us.
I wasn't really listening.
Nope, that's
Sorry.
Fine. Thanks for admitting that. I don't listen to you either.
Yeah.
That's good. That's good. All right. So let's see here. Our first item, companies aren't concerned about the economy. So I saw a bunch of stuff on this. You have a post in here from JP Morgan. So why don't I let you start? I saw some stuff in FactSet on this too. So let me let you start on what are you seeing in earnings and what are companies saying and not saying in those reports?
Well, earnings season is pretty much in the bag. There's a few lingering companies, Probably the biggest, most important company is reporting. One of the two. It's NVIDIA on Wednesday and CrowdStrike. So by the time this comes out, actually, yeah, you'd probably have to wait till after the market closes before those two pretty big announcements are coming down the line. We'll touch on NVIDIA and AI, and I got quoted in Super Money, and we'll talk about that as well.
Hey, nice. That's right. Let's call that out. Yeah, How got quoted in Super Money for the second time?
I think so.
Yeah, I think so. Okay.
Yeah, they've been pretty great for us. We'll refer to that, but let's start broad with earnings. The number of S&P companies during earnings calls, right? There was a notable absence, right? And that was recession. So I know we were just coming off our unemployment scare, right? Unemployment jumped up to 4.3%, which triggered this really unknown rule, which our industry is known to do. It's like, oh, this rule's been triggered, and therefore we're going to sell off 30%.
Some rule.
Yeah, hide your wives and hide your children because the sky is falling. We did see a lot of that, actually. Those people have been definitely quiet. I wish we could take their microphone away, but sometimes they make a name for themselves when they are right 1 out of 10 times. Mm-hmm. So this time around, really outside of, who would you say, Starbucks, McDonald's, the people who run Burger King.
Fast food has struggled.
Yeah, fast food has definitely struggled. Because remember we talked about McDonald's, if they price their Big Mac meals up to a certain level, well, people are going to just go to Red Robin or Chili's or more of a casual sit-down restaurant because you're getting better service, better quality food. Mm-hmm. Why would I commit to a $15 Big Mac meal and McDonald's don't hold me to that figure? I'm just using a round number, right? So $15 at Round Robin seems to have better value, right? Mm-hmm. And that's where people are going. And I think that's what we're seeing from earnings, where people aren't completely shutting down spending. They're just shifting, and they're finding value where they think there's better value, right? And they're voting with their dollars. And I think they're leaving McDonald's, Starbucks for other options. And that's okay. That happens. So what's McDonald's going to do to respond? Lower their prices. Or Starbucks, which we'll talk about. They're probably going to revamp their reward system and make, accessing rewards cheaper or easier or more attainable for regular Starbucks drinkers. But we're not seeing a big amount of companies that are slowing down their capital expenditures, which is just like, hey, I'm going to pile money into AI in the hopes that it will pop, right? We're seeing a lot of that capital investment continuing, definitely not slowing outside of tech labor, but tech spending overall has been pretty robust.
What do you think about, I'm putting you on the spot here, what do you think about the Ozempic craze and Mounjaro craze? What do you think about the reports coming out of that drug and people not going to fast food restaurants versus what you just described, which is kind of the trade up or trade down? You know, I'm gonna go to Chipotle, not Taco Time or Taco Bell. You know, what do you think about the drug side?
Well, I'm gonna trash fast food eater a little bit, and again, I don't mean it in any derogatory way, but they're more likely unable to afford a treatment from the GLP-1, like the dietary drugs, because those, you know, if you don't have like a diabetes treatment or diabetes need for it, you're paying out of pocket about $1,000 a month. If you can afford to pay $1,000 a month, your diet probably does not consist of a regular McDonald's meal or a Taco Bell meal. So
on average, at least. Yeah.
So I don't think that's really the right focus for that. We are seeing some positive behavior changes, right? People are drinking less and obviously eating a lot less. So that can definitely hurt alcohol companies, right? I know Diageo is running through some problems. Right? Diageo makes, I think, Captain Morgan and other spirits.
Yeah.
And if people aren't drinking, that's one thing. Fast food, it might be more of the value proposition from their point of view than people on Ozempic deciding not to eat a Big Mac. Does that make sense? Because I don't think they would be that particular demographic.
That's interesting, though, because isn't so much of America diabetic or pre-diabetic, therefore could get the drug covered by insurance? And so I almost, you know, this is a question that we don't have the answer to, but I almost want to know, what's the data on how many, by percentage, how many people who are taking these drugs are being prescribed and paid for on insurance versus are paying out of pocket?
Yeah.
I mean, it's probably like 75-25, right? Like, it's got to be a lot of insurance that's covering these.
Well, maybe I'm underestimating how many diabetics America has, and how bad that, you know, epidemic could be. Or what I'm thinking about it is a very much I don't want to say cosmetic because it has a lot of health benefits, but the demand for it, right? If you look at the companies that produce it, like Novo Nordisk, Eli Lilly, and you know what? I can't remember the. Again, don't take this as investment advice. You shouldn't just rush out because two guys talk about a miracle weight loss drug. But the demand for it has been so high. Like there's a wait list. There's inventory issues, right? So if you're already prescribed it, you could go 3 months, and then all of a sudden that fourth month isn't available to you. So I don't know if we have that many diabetics or that many people who are willing and able to pay for that pretty high.
Yeah, that's a lot.
Price. Yeah.
I mean, we talked about a year ago, car payments. The average car payment's $1,000 a month. You know, which is a lot. And then now you have a weight loss drug that's $1,000 a month too. Yeah. On top of sky high mortgage rates and rents that have gone up. I mean, it's you know, pick your choice there, right? Yeah.
And maybe that's a good topic for next time, where we actually dig into how many people actually qualified for that reduced cost.
Yeah.
Because if it's if it's the lion's share of it, I think that makes sense. And that could be encouraging for the long-term health of the broad population. But the fact that the other side of it is the fact that we need a miracle drug to curb some of that. You know, there's something worrying about that, right?
Yeah, it's interesting. Okay, well, let me bring us back here. So, and just to explain this chart that's on the screen here, we have data going all the way back to the first quarter of 2022, and so this chart that we're looking at shows a vertical bar, for every single quarter from first quarter of 2022 all the way up to this last quarter. So there's quite a bit of data here. And what we see is the number of companies that are citing economic slowdown has been on a steep decline. It was highest in the second quarter of 2022 and has started going down ever since. And it's sitting basically at a low. Citing consumer spending, it's kind of held, but come down a little bit. How, to your point, capital expenditures has almost remained exactly the same for this entire time, which is actually a bit surprising that even in 2022, it was quite high.
Yeah.
Job cuts has floated up a little bit, but it's sort of been like a hump, like a mountaintop. So that's just to explain to our listeners what we're seeing to help expand on what you were saying there.
And it was reaffirmed specifically with Meta and Google, right? Like both Zuckerberg and Sundar Pichai, right?
Mm-hmm.
Said, we don't want to be caught with underinvestment in AI.
Mm-hmm.
So we're going to go overboard with it
Mm-hmm.
because we think there's something special underneath. So we'd rather overinvest in the hopes of finding gold
Mm-hmm.
versus underinvest and being left in the dust. Because,
Mm-hmm.
yes, underinvestment can be just as dangerous because those companies don't exist anymore.
Yeah.
Right?
Yeah.
Look at
exactly.
BlackBerry.
And we'll know. Yeah, look at BlackBerry. Jeez. Are they still publicly traded?
I think so. They're definitely a meme Wall Street bets focus
Are they?
type of company, yeah.
What are their services? I don't even know what they do anymore.
I don't know if
Don't even.
someone correct us. I don't know if there's like a 2020 version or better of the BlackBerry. I haven't seen one in the wild. I haven't seen a commercial. I haven't seen anything.
Well, I mean, yeah, they were a devices company, right? So
Yeah.
it's like, what else?
What's the latest device?
Right. I'm gonna have to look that up. All right, let's move on to Starbucks and Chipotle. So this hit the news that the Chipotle CEO was hired to replace the Starbucks CEO. So Starbucks has struggled a bit over the last number of years. Howard Schultz has been the CEO, I think, 3 times. Of course, he was the founder of Starbucks, and the CEO stepped down, didn't work, came back, stepped down, didn't work, came back. And it's tough, right? It's tough to find a good replacement. Disney's going through the same thing, topic for another day. But Bob Iger has come back to Disney at least twice as they try to find a replacement for him. So Starbucks' stock price was sort of ailing in these last handful of quarters as their sales were coming down and just, they weren't meeting Wall Street's expectations. Hit the news recently that Chipotle's CEO was just hired on to Starbucks. What I want to highlight here, and then how I want to know your thoughts, is the day that this was announced, Starbucks added $25 billion of market cap on the day the CEO was announced. Meanwhile, Chipotle lost $5 billion. So there is an imbalance here. But man, how'd you like to be that guy? When you get announced somewhere and your name has so much clout that the stock goes up by $25 billion?
Yeah.
No
but
pressure.
The company you left lost $5 billion, so the net effect is $30 billion.
Right?
Yeah.
That's pretty wild.
I can't think of a single person who's worth that, Elon Musk, but
I mean,
the valuation of single people now has just gotten so crazy.
Right. It's like, you just added the value of this person, or, you added the value of this company. So anyway, what are your thoughts on this movement in the market, like what the market is pricing in here? And then I want to talk just for a minute about the remote work piece too, because that's been all over the news.
Yeah, I thought that was a fun piece of the story.
Yeah.
As Chris mentioned, it was a 25% update for Starbucks, which added $25 billion with a B in total market cap, and Chipotle lost $5 billion on the same day. So overreaction yet to be seen. Has he started? I don't know.
Nope, he starts next month.
Okay,
a couple weeks.
So that's the market pricing ahead, right? This miracle worker, he did come from Taco Bell and definitely turned Chipotle's fortunes around. Remember, Chipotle had these string of food safety issues and people getting the Chipotle revenge. I don't know how else to say it.
I remember that. Yeah. Fortunately, I didn't get it, but I remember that in the news.
Yeah. I still maintain it's too expensive for me to eat.
You missed out.
Yeah. And I think the turnaround story there, which
you just got to go to one of those Chipotles that packs it on. It's all the same price, you got to get a 3-pound burrito instead of the standard 1 pound.
Did we talk about how?
Yeah, we did.
Well, this is how you get over on Chipotle: is you whip out your camera and pretend you're filming them, and then the workers will start loading up your portion size.
We talked about the disparity too. It was like They ranged from, I think you said like 1 pound to 3 pounds or something like that. That was on another episode. That was fun.
Yeah, 2 standard deviations. So yeah, that was a. I think they buttoned that up, and they're going to lean towards Chipotle is going to lean towards more of bigger portion size.
Mm-hmm.
But yeah, Starbucks for one person, albeit the most important person in the company. The question is, are they worth $30 billion in total market swings? I don't know. For a food-based company, you could probably argue like Tesla, AI, and things like that, but even then, $50 billion for Elon Musk was, to me, from my opinion, was a bit of a stretch. And that probably would land closer because Tesla is viewed sometimes as a tech company, not a car company.
Well, I think what's interesting here is, well, first of all, he's pissed because his offer probably included a stock price strike of like his first 30 days of employment or something like that. So he just struck gold, right? Because all his unvested stock at Chipotle is now gone, and it dropped in price, so who cares? But he's yet to receive his stock at Starbucks, right? Because he has to sign the offer, start, and then they grant him shares. So he's getting the shares at the price that's actually 25% up. So I
Unless
guess
they give him a pretty sweet discount, though, too.
I mean, can they do? They could do like performance units, but that's going to be based on future, right? Like he now has to live into this stock price and maintain it and grow it in order to get his stock. So actually, now that I think about it, it's actually bad news for him that the stock went up that much, because the market's already pricing in a significant amount of performance that he probably won't get paid out on.
Could be, yes. Again, the Starbucks is actually giving him cash to make up for the loss in the Chipotle shares.
Oh,
so
interesting.
That's one payout, and then the other payout would be the future stock. And then I think the third payout, which is what you touched on, is the super commuting, which I think is a pretty cool perk.
Yeah. Last thing on my mind is that it is actually, the 25 billion is one thing, but the 25% is another thing. Yeah. Because it's one thing for Microsoft to move by 25 billion, but Starbucks jumped 25% in a day. I mean, that's alarming. So, that's, there's a very high bar for Brian, the new CEO, to live up to here.
Yeah, and going back to value, right? Chipotle is one of those companies that saw decreased foot traffic. They're not as welcoming, right? A lot of Chipotles, again, probably not the lion's share, but a lot of Chipotles are get your coffee and get out versus get your coffee, hang out for a while, right? Which was their model. I think they want to shuffle people out faster. You
mean the Starbucks is get your coffee and head out?
Yeah, which is diametrically opposed.
You said Chipotle there, so I was confused. So Chipotle, is it a get your burrito and run out, or is it a?
I think
Just say what you were saying again.
But yeah, I think under Howard Schultz, Starbucks model was, hey, bring your laptop, bring a book, lounge out. We're going to make everything a comfortable setting. Yeah. I don't know if you've been inside of Starbucks lately, but a lot of the seats were removed from my local Starbucks, and lounging isn't. It's still there, but it's not as welcoming as it had been.
Well, because I think. Go ahead. Sorry.
Well, I think if you rush in and out, they could probably serve more people.
And I think that's one of the things they're struggling with is that mobile is now a significant percentage of their orders, which means people are just coming in and out or going through the drive-through. But Starbucks is saddled with these big leases. They're leasing these big spaces that people are supposed to sit at. Yeah. And they're not sitting there. So, it could be a change of model, right? Where they have these like little drive-through cafes, which they've piloted a few of those. I don't know. Do you have any in your city that look like containers, like truck containers or shipping containers?
Not Starbucks. That's kind of like a Dutch Brothers territory here.
Okay.
Where they have the little shed.
Yeah, Starbucks literally buys old shipping containers and like builds them into these little barista shacks, and it's kind of a pilot in a play on sustainability, but they can drop them in and get them up to speed in, I don't know, a day or two or 3 or 4 or something. versus a store has to build out, right? And so they piloted it. There's a handful of around town here, but maybe that's the future, right? Where you're really just a drive-through window and you don't have the sit-down space.
Yeah.
Now you're renting from somebody's parking lot versus renting an actual building. Far different in terms of cost.
Yeah, and I think you don't have to pay an employee to clean up after someone who's lounged there for 4 hours, right? And I think that was pretty common, right? They're just taking up space and they buy one coffee. What kind of trade-off is that? And I know that the idea was you're going to buy multiple coffees, but at $4 or $5 a pop, that's not as beneficial for anyone who's looking to lounge around.
Well, yeah, I mean, I think they're probably hoping that you're there for $12 or $15 or something. You get a snack and you get a coffee or you get a sandwich or something like that's what they're hoping for when you're sitting there. And sure, some people get a $2 drip and sit there for 3 hours, but some people probably spend $15 or whatever and sit there. Anyway, okay, let's talk about this commuting. So I'd love your thoughts. For anybody that doesn't know, so the new CEO, Brian Niccol, he was granted the ability to work remotely from his house in Newport Beach, California. And he will be commuting up to Starbucks 3 days a week. I believe he will also maintain some sort of a residence in the Washington area while he's here, because he'll commute up, stay for 3 days, commute back home. And that is Starbucks' policy. You have to be in the office 3 days a week. And the company will also allow him to use the company jet in order to do this and spend up to $250,000 a year of, jet miles, that kind of a thing. So that's what I know. What do you know, and what are your thoughts on this?
Yeah, I'll backtrack. I said it was a cool perk. I think it's definitely an exclusive. You only get this if you're a CEO perk, and everyone else, obviously a Starbucks worker has to be in the office, right? Because I can't think of a barista doing remote work.
That's a fair point.
I think as a shareholder, you should, one, question the CEO's focus. Obviously, he could do quite a bit remotely, and my personal opinion, working physically in the office could be just an overblown benefit from middle management and up, right? Mm-hmm. That's one part. Shuttling a guy back and forth from Southern California to Seattle, that seems a little crazy and out of touch. And maybe that's what Starbucks' reputation has kind of devolved into, is just being so out of touch, right? The coffee's out of reach for affordability, accessibility in terms of sitting in the coffee shop without getting side-eyed or shoot out. I think they were desperate for a new CEO. They're paying him a lot of money to shed his Chipotle shares. So there's just two costs, right? The jet, the old shares, and then the future cost of the new shares, right? The new Starbucks performance.
Yep.
I don't know if he can turn this around. It's such a saturated market for Starbucks, right? And one on every corner, as a result of Howard Schultz just massively overbuilding. So what the market's going to look for is same store sales. Mm-hmm. What is he going to do other than slash prices pretty steeply, which, one, not good for business. I don't think there's an easy way out for this company. And I think that the jet setting definitely does not sit well for people who are paying attention, which is probably the very minority. I just don't think it fits what the image that they're trying to spin around and turn around. Because it's the image thing, right? With like McDonald's and Subway and Wendy's and all these companies that have jacked up the prices, now they're seen as unaffordable.
Mm-hmm. I think that's a really interesting perspective. I'm glad I asked you. I'm
glad you did too.
I think you're wrong. No, it's. I think that I agree with your sentiment on did they not have anybody applying for the job, and so they said, all right, that's the guy for the job. We'll do whatever he wants in order for him to take the job. That's the guy who's going to save the company type thing. And maybe that was a bit of the board influence and whatnot. I mean, I'm sure that these companies, when they're saying we need a new CEO, there's probably a short list, right? There's probably not anybody can run this company because there's niches, right? Starbucks is not that different than Chipotle when you really think about it. So I disagree with the sentiment on just slashing prices is the only way out of it. I think that, as I think about when Satya took over Microsoft, there was this sentiment around we're going to return to our roots, which kind of is a fancy way of saying we're going to stop doing everything that we've been doing and we're going to go back to what we're good at and we're going to scale that like crazy. And they didn't lower prices. They expanded services and they just started getting more integrated. And so I have to wonder if Starbucks could do something like that, expand services, improve quality, probably reduce footprint. I think that they're incredibly overbuilt. I agree. They're everywhere, right? They're in the Barnes and Noble. They're in the Target. Safeway. They're on the corner of all the same complex. Like, do you really need that many Starbuckses? So I think that there's some advantages or improvements that could be made there to make their bottom line look better. I think regarding this remote work thing, on one hand, I think that being a CEO is a it's a big job, and I think that there's a lot of in-person stuff that has to happen there. On the other hand, he is complying with the company policy. So what's to say that he needs to do anything different than that if that's the company policy? 3 days a week in the office. That's what he's going to do.
Yeah, and I would say that 3 days in physically in the office, probably over, just overdone in terms of how important that is. I think someone like that can do video conferencing and be fine and stay in California. I don't think he would need to really fly that often.
I think where it gets strange is if you have all of the executives in a conference room and then you have the CEO calling in. Yeah. And he's the only one calling in on video and everybody else is actually there. And it's like, okay, there's going to have to be some pretty significant calendar management here of, you're going to be in the office these days and we're going to have all our meetings these days. I also recognize that he's probably going around and observing a lot of the stores and stuff, right? So that
would make sense.
And he said he would do that. Fine. Yep. So, anyway, I think it's interesting. I think we'll see how it goes. I think the backlash is a little bit overblown.
No one knows that they got a new CEO.
Well,
most
people
Starbucks drinkers. People
give executives a hard time for flying corporate and all this, or flying private, and it's like this is just how things work. And by the way, $250,000.
Yeah, $90 billion company now. Yeah, they can definitely absorb that.
Well, I read that and I was like, is it $250,000 a month or it's $250,000 a year? So that means he's actually going to come out of pocket a lot for this because the company's only willing to say $250,000. These flights are not inexpensive in terms of landing fees and aircraft maintenance and all that kind of stuff.
And I was saying out of touch where, again, Starbucks seems like a luxury, and then when you got it, let's say it comes out widespread news, it won't. That the CEO does take a private jet from Newport Beach, which is really ritzy area in California, to corporate headquarters. And, you see what I'm saying is that's the McDonald's luxury problem, right? Those two words don't go together. Starbucks is kind of in between where, yes, you should be getting premium coffee. It's good coffee, right? But people have viewed it as not as great of a value as it once was, and they're voting with their dollars. They're making coffee at home or going somewhere else.
All right, let's move on to the Fed. What's your analysis of the Fed's meeting in Jackson Hole, and what did Jay Powell say at the end of his speech?
Let's go there. I think the wording and the language is definitely softened. So the time. I'm quoting here, the time has come for policy to adjust, meaning previous was higher for longer, right? That's language that no longer exists in this particular, I don't know, cycle. Again, we're talking about cycles over months here, so this is kind of crazy to say. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risk. So the big thing that's been brought up now is the dual mandate, right? Price stability. And again, let's level set there where prices are high. The Fed does not care that a Big Mac is $10 when it used to be $5 2 years ago, right? It just cares about if that $10 Big Mac goes from $10 to $12, right? Mm-hmm. That $2 difference is 20% inflation. Mm-hmm. The Fed wants to stabilize the price of Big Macs in a rudimentary sense. So that's target number one, right? Target number two is unemployment or full employment. And that is a 5% unemployment rate. And I think that's the big thing that's being shifted now. Again, we mentioned the SOM rule was triggered because the unemployment rate ticked up. Again, more people jumped into the labor pool, which is actually a great thing. But we can't ignore the fact that the number of open jobs has steadily declined. It's not as robust as it was in 2022, 2023. So we are definitely headed for a slowdown in hiring because there's not enough jobs, right, that are currently going to be available. That's what the focus is now. And that's really what the speech was all about, was focusing on the second mandate, because they think that the first mandate of price stability is good, which, CPI data, inflation data looks good. The second piece is how do we stop the slowdown in job creation and land the plane, essentially. That's where the soft landing is coming in.
Have they thrown out the window the 2% inflation mandate?
So the PCE inflation is at 2.3%. So they understand that their decisions are lagged. So that inflation should continue to trickle down.
Interesting.
Yeah, because of past movements. Now they're trying to look ahead because of the lagged effect here, where if they stay too high for too long, they could be on the brakes for too long, where that could definitely slow down the economy faster than what they anticipated. Because let's say we go from 4.3% unemployment to 6%. Once it hits 5%, you can't just say, "Hey, economy, pick up," right? Let's start hiring people. It doesn't work like that. So I think that's what they're looking at is can they overshoot the restrictive policy? And it looks like they're more concerned about that now than inflation.
Interesting. So what's the market pricing in for the September cut? Are they pricing in 0.25% or 0.5%?
Both. So the 0.5% is a 30% odd. So there's a realm of possibility or world where we can get a 0.5% cut in September. What does that look like for the Fed? Well, that means they screwed up and should have cut in July, and they're trying to make up for it. I think that's unlikely because that scenario that I explained, it's going to chip away at the credibility of the Fed, however much credibility they have left. So do they stay the course and just cut 0.25% just to at least get the ball rolling? I think that's more likely. The market thinks so too. That's 70% odds. But if the unemployment number or the jobs number, which comes out the Friday before the Fed decision, if it comes in really low, then they might be forced to cut more aggressively, which I think is them admitting another mistake.
So for the record, do you think they're going to do 0.25% or 0.5% in September?
I would call 0.25%. I think this Fed has been hyper aware of their own reputation, and I think they're more worried about their credibility than actual jobs, if that makes sense. I know they care about jobs, but you see what I'm saying is they don't want to be known as the Fed that screwed it up so bad.
I'm with you.
Yeah.
I'm going 0.25. I think there's no way that they go 50. 0.5%, 50 basis points, because that is them signaling we got to go faster. And they're not I think in a way that would panic markets, and I think there's no way they're gonna scream confidence the whole way until something's really flashing red, and then they do something.
Yeah, and again, they're mostly doctors and very, very qualified people, and again, they're data dependent. I think, from my point of view, to a fault. They definitely know that the labor force has grown, right? Because they're not ignoring any data piece there. I think the stuff we're saying, they've already poured over and debated 10 times over. So I think they're seeing the data that we're mentioning, and they're trying to, at this point, manage some of the fallout.
So let's shift over to jobs, because that was a portion of what you talked about, and you've got some data here. So let's unpack what's going on with jobs and the jobs report.
Yeah. The payroll gain was 114 in July, which again positive, right? But look at the peak of. We're looking at a chart from J.P. Morgan. The peak of 2021, when the economy was reopening, $900,000 or 900,000 jobs was created in a single month. In January. Let's say March of 22, 850,000 jobs created. August 22, 690,000 jobs created.
Okay, but you're calling out all the high ones. Like, this must be the December quarter.
Correct. Well, the high ones are that first quarter, quarter of the year. So it looks like
so that's probably
pre-summer hiring. But I'm just pointing out. Yeah. Remember the good news is bad news scenario we were in 22, 23, where the economy's too hot, inflation's too hot, too many people are getting jobs, and they're getting therefore wage gains, and this is contributing to more inflation. I'm calling those high jobs numbers out because this was the first time in a long time where when jobs came in lower, the market reacted poorly. So we suddenly went from good news is bad news to bad news is bad news. Mm-hmm. Because, the theory was if the economy's too hot, the Fed's going to keep rates higher for longer. Therefore, anything that shows positive signs of spending, retail, jobs, we're just extending out the potential rate cuts, and we don't like that. Now, all of a sudden, we get a lower than expected jobs number, and again, I'm going to repeat, it was positive. We're suddenly negative about it. Mm-hmm. So that's how quickly the sentiment changed with July.
The other interesting thing here, I'm just scrolling down a little bit in our deck. You're seeing an increase of participation of foreign-born labor force. That's interesting.
Yeah, I think this is a bit of a snapback from 2020. We closed our borders, which again made sense. Even before that, foreign-born, we had negative growth in 2019. That's mostly due to Trump's policies. But then in 21, 22, 23, the majority of new workers are foreign-born. Our domestic demographics have definitely been shrinking, right? We without immigration, we're looking like the new Japan. And if anyone who doesn't know, Japan's population has been declining. They have very tight immigration policies, and then therefore their economy is shrinking. So from our point of view, this has been kind of a regression from the last administration's policies, where tight borders, no immigration, to normal, right? And then all of a sudden these people are coming in and working. Mm-hmm. And the chart below that is total labor force and the number of working age population. We're now above, and again, it took 4 years, we're now above the pre-pandemic highs of around 63% our total labor force. So this had been quite a few years in the making, where, again, it feels like such a long time ago in like 2022, where for help signs were everywhere. Yeah. And you heard so many companies, so many businesses couldn't hire people who were willing to stay. Yeah. Right. I've heard of bars and restaurants that would lose, staff within months to go across the street to get a better paying job,
Yeah.
and then bouncing to another job. And I think that has definitely slowed. Hopefully this helps out the small businesses that are looking for that frontline labor. It looks like it's coming in finally, but just in time for our slowdown. I don't know how you time this worse, but I think this is an encouraging sign if we could keep this economy growing and expanding the way we have.
The other interesting thing I see here in 2020, obviously a big candlestick down because of the labor force growth going negative, but it was mostly native born. So a lot of native born people were laid off during that time. And it's not been a net, if I add up the size of this gray bar, the native born bar, and then I add up the next 3 years of positives, I don't think that the 3 years of positives outweigh that negative. But if I go to the loss of foreign born jobs and then go to the next 3 years, it's probably 6 times.
Yeah.
6 times the amount of people that have come into the labor force that are foreign born that are working versus native. I mean, that's I suppose good that the U.S. has an economy that has that mix, but that's not necessarily good for for the native born population. Like, what the heck are they doing?
Well, they're trying to be YouTube stars. No, I think a couple of things are happening there in 2020 specifically, right? We talked about that pull forward where the Great Wave, right? The baby boomers had started to retire, the oldest of the baby boomers in 2013, 2014. And then as you got to 2021, they got anyone who was planning to retire in 21, 22, 23, and even this year to say, screw it, I'm just going to retire now.
Yeah, yeah.
And I think that is sticking. But without COVID, let's say we did get the normal retirement, range each year, you would actually see those native-born numbers stay persistently negative, if that makes sense.
Mm-hmm.
Because, again, we're a little bit more of a cylinder, right? We have all these generations, and the baby boom generation is as large as the other generations below it.
Right.
So it's not a sustainable equation or calculus where we're not replacing workers fast enough.
Interesting. Well, on that note, let's move to grocery stores. I just want to make sure we touch on this before we wrap up. So grocery stores compared to food manufacturers in their margins. This chart blew me away when I saw that you put this in the deck. So
super surprising.
Go ahead. Let's unpack this.
Well, this triggered me because Kamala Harris was saying, well, we're going to legislate price gouging. I was like, oh, okay, we're going to go after Walmart and Target for jacking up their prices. And we got data from Sherwood Media FactSet where Walmart and Kroger compared to Pepsi and General Mills, right? Profit margins in Walmart and Kroger, I'll stick with them because they're like the grocers. They sell the General Mills, they sell the Pepsi products. Mm-hmm. Profit margins in 2019 for Walmart, 3%. I'm going to jump over to 2020 because when things were really bad, everything was shut down. Margins from Walmart actually went up to 4%. And then 2021 was things reopened, 2%. 22, 2%. 23, 3%. 24, 3%. Mm-hmm. We're talking about one of the biggest grocers in the entire world. We're looking at 3% margins. Kroger follows the same path, right? And then when I go to Pepsi and General Mills,
but actually a little worse. It tells you how good Walmart is at their game, but still same path. Yeah,
same path. Again, Kroger doesn't sell bicycles or DVDs or anything. We don't have Krogers nearby. Oh, do they? I don't know. Do they sell everything like they do Walmart?
Yeah. Do you have Fred Meyer down where you are?
No.
Fred Meyer's kind of the everything store. You can do groceries there. You've got bikes. You've got clothes.
I stand corrected.
Yeah.
So, let me go through Kroger in 2019. 1.5% profits. 2022, 2021, 1%. 2022, 2%. So you see where I'm going with this, right?
Yeah.
And then who they sell, Pepsi and General Mills, right? Pepsi, 2019 profit margins, 17%. That's 4 or 5 times more than Walmart.
Mm-hmm.
General Mills, 12% in 2019. 2020, General Mills, 13%. Pepsi, 10%. 2021, Pepsi, 11%. General Mills, 12%. 22, when things were getting really out of hand in terms of availability, Pepsi, 13% profits. General Mills, 15%, 1.5. 2023, 12% for General Mills and 9% for Pepsi. And then Pepsi at 10% for 2024, General Mills at 12%. So the price
Crazy.
gouging, definitely not the grocers, but I think you can point to Pepsi, call it price gouging, rent seeking, or pricing power. Something is baked into there where Pepsi is able to consistently be near double-digit profit margins.
Yeah.
No
And
matter what
maintain
prices
them.
are doing. Yeah, and maintain them.
They really have come down a little bit, but they really haven't.
No.
They really haven't.
No, and I think the telling part is that 2022 spike where inflation was really bad, their profit margins, right, outpaced inflation. Right, inflation at its peak was around 11%. They had profit margins of 12%. General Mills is probably the bigger story there, where 2022 they were 15% profit.
This is crazy too. There's a quote in here about the CEO of Kraft Heinz
Yeah.
saying that they would do everything, basically saying that they need to raise prices because they're a leader to compensate for inflation. They need to compensate this inflation with price increases.
Yeah, the CEO of Kraft Heinz is more of a hedge fund money manager than a CEO of a food company.
Interesting.
So Kraft Heinz was bought out by some leveraged buyout company, and they installed a finance guy in there. So we are the leaders of the vast majority of categories where we play. It's our role as a leader to try to compensate this inflation with price increases.
Mm-hmm. Mm-hmm.
And again, I don't know if you remember, we don't have Kraft margins there, but Kraft mustard, ketchup, condiments all raise prices pretty aggressively.
Wow.
And then the next one is Nabisco owner. This is Mondelez. Very similar structure to the Kraft company, where Mondelez is more of a finance first company and just kind of hiding as a food distributor. So they make Oreos, they make Cadbury, chocolate eggs. They were fined $366 million for anti-competitive practices for hindering trade between European countries. So what they did was they altered the chocolate trade to essentially jack up the price of Oreos and chocolate products. And countries who traded to other countries that weren't in their, purview, they went after them by restricting supply and making prices go higher. And then they were found guilty of this, and this was a practice that was happening from 2012 to 2019. They were found guilty of this kind of essentially price manipulation, right? Because they were restricting supply in one country, jacking up prices. And if a friendly country was bringing in chocolate because, the prices are higher there, they would restrict chocolate supply in that particular country that was importing to that high price country.
Interesting. It says here that the parent company stopped supplying chocolate bars to the Netherlands to prevent them from being imported into Belgium. Yeah. I'll be in both those countries a little bit later this year, so I'll let you know if we can see chocolate bars from there. But this is because they got sued here by the European Union, or fined, I guess, for anti-competitive practices. saying that, their actions harm consumers, blah, 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 which is interesting.
Yeah.
By the way,
if you're
fun fact
sensitive
about
to prices,
Oreos.
Oreos are cheap. Yeah, they're expensive now.
Fun fact about Oreos. Do you know why companies release new flavors of their products?
Probably just to reinvigorate interest, from my point of view.
The reason is because you will buy that new flavor and you will always buy the original. So when they released like peanut butter Oreos,
Yeah.
you come home with a pack of peanut butter Oreos, but
And then regular.
you don't skip buying the regular.
Yeah.
And so it actually sells 2 packs. So when you have all these companies, Lay's chips and Oreos and all these that are introducing these new flavors, it's in an attempt to sell more of the original product.
Wow.
There you go. Fun fact.
So there it is. Yeah, the margins are definitely not in the grocery store. So when you hear that, just be a little bit of a skeptic. But we are seeing quite a bit of continuing proof that the margins are in the producers.
It makes
The
you wonder,
manufacturers,
when you see these margins, it makes you wonder what Amazon is really turning on retail. And it makes you wonder what they're turning on Whole Foods. Because like Walmart is kind of and Kroger, those are kind of a combination of Amazon retail, everything they sell online, the everything store, and then Whole Foods, which is a massive part of Amazon's portfolio, right? It makes you wonder what they're really getting on that. And then I suppose Amazon, maybe their secret, as I think about this, maybe it's because they do manufacture stuff, right? They're Amazon branded batteries,
Basics, right?
And things,
The basics,
right?
yeah.
Amazon basics, yeah. So maybe they can blend the margins on that in the way that Pepsi and General Mills do with then their lower margin retail. And obviously no brick and mortar, but yeah, interesting.
We just had a Amazon Fresh opened up, a physical store, and there was like a big line for it. I don't know if you guys have them up there. I'm sure you do.
We do have them up here.
Headquartered.
Yeah. By the way, I'm always impressed when Amazon launches a new concept somewhere outside of Seattle. Like, we're going to launch this new concept and we're going to do it in LA. Like, okay, that sounds like a lot of like, wouldn't you just test it in Seattle? But for some reason they do market testing and they test it in the markets that they think it would be the right one. So, anyway, Amazon Books is actually going out of business in U Village. They left. So I think their retail footprint is shrinking a little bit.
Didn't realize they had a physical bookstore.
Yeah. They've launched a couple of bookstores. It's kind of ironic that they closed all the bookstores and then they launched a handful of their own. I don't know if they were just in Seattle or elsewhere, but it closed. It was in U Village, which for something to not make it in U Village is like, there's problems. U Village is like the best retail place around here.
Oh.
Like they get a ton of foot traffic and whatnot. And a restaurant's going in there in the space. So anyway, more fun facts. I'm full of fun facts here at the end. So, okay, that is it for episode 56 of Top of Mind with Consilio Wealth. Thanks everybody for tuning in. We'll catch you again in 2 weeks.
All right. Thank you, everyone.